Welcome back. All those SPI futures look like we're in for a pretty good start this morning for our local market, up 38 points, I suppose, coming off the back of pretty good gains that we saw on Wall Street. And a lot of that was put down to that good result that we saw from JP Morgan. Let's get the thoughts from James Ordis over at Shaw and Partners in Sydney. James, a lot of the market really seemed to be rallying off this JP Morgan result, which appeared to beat market expectations. What did you make of the result?
They beat numbers on the top and the bottom line based on downgraded expectations, obviously, and so that's a glass half full, glass half empty type of scenario. So JP Morgan is well known as a bellwether in the US, particularly for the financials. There, that they lead off the reporting season over there, just as we had Alcoa lead off for the materials, and on the basis of that, those numbers being better than what was considered to be what they might come in a little bit lower, and the downgraded expectations, that sort of stock shoot higher, and it took the rest of the market with it. It was really broad, the actual gains in the US markets. It was across all sectors pretty much, and so we had 24 of the 30 Dow components rallying to the upside. The financials were very strong, even Goldman Sachs outperforming the moves that we saw in JP Morgan. And we've got Bank of America coming in on the back of that and reporting. They'll report tonight, Wells Fargo as well. So the financials are obviously taking the US markets strongly higher. Materials were higher as well. And obviously that's going to lead off to, as you pointed out, the 38-point upside that we've got for the SPI at the moment.
Very interesting though, because obviously it was a beat there on those so-called sort of expectations. We know the bar's been set so low there. We were speaking to one of our earlier guests this morning, Kenny Polcari, and he was basically saying that JP Morgan's result was certainly a massive beat on expectations, but that was mostly due to analyst caution. Let's take a listen.
Out of cautiousness, a lot of these analysts did exactly that, right? They try to prepare for the worst, and you under-promise and over-deliver, and that's exactly what you saw in JP Morgan. Listen, that was a big beat, right? I mean, listen, they were looking for 126. If JP Morgan came in at 128 or 129, you might be able to see it, but they came in at 134. That's a big miss when you talk about kind of analyst projections, and so it just leads some of us to ask, some people to say, were the analysts too cautious? Were they so cautious that now that beat looks so impressive that it can only be up from here?
So James, just wanted to get your thoughts on that. I mean, suggestions that they may have sort of purposely set the bar so low that the company does come through over delivering. What are your thoughts on that?
Well, yeah, JP Morgan will come out and make their statements in regards to the numbers, and the analysts will back off of that. So, it's not so much JP Morgan having lowered their bar so much, but analysts have done that across the board. So, further to that, after they've reported, you see the preponderance of analysts that have come out, according to Mike Bloomberg, and they've got upbeat expectations with the stock to trade to 69 on average across all of the analysts that are covering the stock. So, certainly, yeah, the bar may have been lowered. And beating lowered expectations is that a great thing, because the expectations are so much lower? But the point is that they actually came out. The market did the marching it moved with the money in out of its mouth. So it actually did the stock up firmly. And we'd like to see some carryover from the rest of the financials as they begin to report. Jamie Dimon's obviously rated as one of the best, if not the best, CEOs going around. And it's not as if they've fudged their numbers in any way. They've just beaten the lowered expectations. So if they continue to do that, then the stock should continue to grind higher.
Mm-hmm.
James, it's George Lucas here. Do you think this will be a trend across the whole earnings season in the US, that the analysts have taken a much more negative view on the market, and that we're going to see a lot of earnings surprise on the upside?
Yeah, that could. Yeah, you're right. That could well be the case, because we're expecting for the quarter, quarter that we're going into right now, first quarter 2016, for them all to be about 9 to 10% lower than what they've been in the previous corresponding quarter. Now, if they do beat those expectations that are now lowered, and they come in and they're only 5% shy, then you're going to see stocks pit up on the back of that. So it's more to do with what the forward guidance is from the company itself, and then what the analysts make of that. So, what I'm watching is where they're thinking about where they're going for the rest of 2016 and beyond.
James, just wanted to get your thoughts on the moves in both iron ore, I suppose that notably iron ore, but copper as well. And it was off the back of China's trade data yesterday, notably those exports coming through pretty strongly. I mean, this seems to be providing a good lead-in for our market. BHP's ADR noted up 4.5% this morning. What are you expecting to see at the open?
Well, as you suggest, the offshore lead in BHP, and additionally traditionally the commodities that they're based around. Oils were off a little bit, so we spoke about iron ore just then, and copper being firmer as they were. The oils came off a little bit, and the market's thinking, well, 1.5–2% down on oils, is that going to lead to a weak lead for the Australian materials guys? Not so much, because we've got to remember where they were a couple of days ago, and so they're taking a little bit of a breather ahead of Doha. But the iron ore index itself is having a go at the levels that it had with those highs in the middle of last month rather. And so I would expect that the materials guys in Australia will trade up on iron ore, not so much on oil, obviously, but yeah, certainly copper as well.
Yeah.
So James, just in general, do you think the major resource companies have priced in now the $60 iron ore price and the $44 oil price, or do you think there's still room for that to be priced in?
Well, again, it's all about the expectations, because we'd heard calls for oil to go to 20. Iron ore to collapse further. A lot to do with the oil price is obviously going to happen over the weekend with Doha, and I think that's why we saw a little bit of a pause overnight with the oil complex trading slightly to the downside, and people are not aggressively positioning and bidding up the oil complex any further ahead of that Doha meeting. If we don't get some kind of reasonable accord which will freeze production levels out of that Doha meeting, then we can expect oil to trade well below the 40 levels next week. And that's where we're going to be very sensitive to that. In terms of our materials guys, George, here, we've got BHP's come well off of its lows, but you look at Fortescue Metals as an example. I mean, it's traded up off a 144 January low to 320 odd yesterday. So that's a massive amount of move, and it's far in aberration of what the underlying fundamentals are in terms of the moves in iron ore, which is obviously their principal commodity. So, you've got to work out whether or not the market's bid Fortescue up a little bit hard on those. And the analysts on consensus and Fortescue are still sitting I think around about the 260 mark. So at 320 odd, it's well overvalued. So it's a matter of whether the analysts now come on board and actually, bid up their targets on Fortescue. And without that, it's probably not going to be sustainable. I wouldn't be surprised to see some profit taking in Fortescue, but where you see some profit taking in Fortescue, you may see that those monies move towards reallocating into the likes of the Rio and BHPs.
All right, fantastic, James. Really appreciate your time this morning. Thank you so much.
No problems. Have a good day, guys.
James Ordis there from Shaw and Partners. George, very quickly before we finish up, your thoughts on the iron ore price? A lot sort of questioning its sustainability at the moment, just under $60.
Yeah,
your thoughts on
I don't know. I'm not very good at forecasting commodities, but it is quite interesting what we were talking about before, that we are seeing, a lot of massive increase of export of steel coming out of China, as I said, at the cost of European and US producers. But, if that trend continues, we're not now just, Australian iron ore is not now just relying on what's happening in China and Chinese growth, but it's also going to be linked to what's happening in world growth, because, the steel will get produced in China, but they're selling it to the world, and they're buying our
Please don't tell me I was just holding that whole time without